Insurance agents from around the world, welcome to the Insurance Guys podcast, powered by Gale. My name is Scott Howell, your fearless host and leader, insurance agency owner and insurance evangelist for I Protect Insurance and Financial Services, based out of Huntsville, Alabama. And before we get started on today's episode, please help me welcome. He is a 6'3" sophomore from Mobile, Alabama, parade first team All-American, Rivals 5-star recruit. He is a fantastic insurance agent and a great American. Ladies and gentlemen, please stand and welcome the incomparable Mr. Bradley Flowers. How are you, Bradley?
Great, Scott. How are you?
Best I've ever been, folks. I've got a story for y'all today. A near-death experience that would have been reported on every major news outlet known to the insurance industry. Bradley, would you like to know what happened?
Well, if you almost died, what news outlet would report on it?
PNC Magazine.
I'm joking.
All
Insurance
the big
Journal.
eyes, Insurance Journal. Here's what happened. What happened was I was supposed to have a meeting at 9 o'clock in the morning at my Huntsville office with our marketing rep and his boss for Frontline Insurance. Pretty big carrier, one of your carriers down here, right?
Yep.
And somehow the schedule got mixed up. They come over. I'm not there. I said, "Look, y'all got to go to Athens today, right?" "Yep." I said, "I tell you what I'm gonna do. Since I stood you up this morning, I'm gonna take you to lunch in Athens, Alabama, because I got to go over to Athens today." So I meet them at 11:30 at my Athens office. I'm sitting at my desk. They come in. We hug it out. We're sitting there. We talk for 30 minutes, and it's time to go to lunch. And I stand up. I said, "My guys, let me take you to lunch. There's a little Mexican restaurant down the street here, probably a mile and a half away up on Highway 72. And since I stood you up today, I'm going to drive you to lunch in the old 2017 Chrysler Pacifica. I'm going to let y'all ride in the lap of luxury." And they said, "That sounds good." So they get in. Sam Rohde, you know Sam Rohde?
Yep, I do.
Sam gets in the passenger seat. His boss gets in the back seat. We got the boss man. We got the boss man with us, right? I'm driving. Pull out of the parking lot, turn left, go about a quarter of a mile, go up on the entrance ramp to Highway 72, and we're making small talk, talking insurance. You know how you do. You just life and insurance and cars and talking about a bunch of stuff, and pull up to the red light. And the light for me to turn left, because I'm in the left lane, goes from red to green, and I drive slow. You know this. I don't drive real fast. I'm like driving Miss Daisy. So I do the 1,000, 1,000. I go to put my foot on the gas, and Sam Rohde goes, in fact, I hit the gas. I hit the gas to turn left, and Sam Rohde screams, "Stop!" And I slam on the brakes, and this lady on her phone, probably looking at TikToks or Instagram, is blowing 3 feet. She is 3 feet in front of the front of my car, blowing right past me, doing 60 miles an hour. I mean, ran a red light like I have never seen somebody run a red light.
So that would have definitely made Insurance Journal for
Yeah,
sure.
if I had gotten killed with 2 marketing reps from a major insurance carrier, that probably
Not
would
only
have made
that,
news.
Sam's wife is very high up at Appalachian Underwriters.
Oh, boy.
So you would have hit the trifecta there. Before you introduce our guest, and I'm glad you're alive.
Thanks.
Let me give you guys a preview as to why this podcast is happening. So I'm always looking for interesting angles for guests on the podcast, and we're up to like 500 episodes now, and so we try to keep it fresh and new and clean, and everybody knows that M&A has been the thing for the last few years, and really ever, but especially the last few years, and I've been big on M&A, doing a bunch of it, and we've even had people say, "Oh my God, will y'all please stop talking about mergers and acquisitions?" And so I tweeted, and it was there was 2 purposes to the tweet. One was to prove a point, to say like, hey, if you really want to get big, you're going to have to do some M&A. And then 2 was to find a potential guest for the podcast. So the tweet was, somebody find me a top 100 agency. This was the day after Insurance Journal top 100 list was issued. And for those of you that don't know, Insurance Journal puts out a couple of lists every year: largest agencies, largest carriers, largest aggregators, largest MGAs, et cetera. And I said, find me a top 100 agency that did not get big by acquisition,
Right.
or that did not get big by being an agency masquerading as an aggregator, which there are a few on that list that did that. And that was 3 months ago. And just so you guys know, we found exactly one.
That's
There's
crazy.
exactly one agency on the Insurance Journal's top 100 list that does not do mergers and acquisitions currently. And I was like, well, that's a wildly interesting podcast. So I got acquainted with Jeff here, who runs that agency. And Scott, I'm going to let you give him a really good intro.
Guys, I want to give him the introduction that he's always deserved. Ladies and gentlemen, he is originally from Brooklyn, New York, and he currently resides in Chatham, New Jersey. He's married to the beautiful April, and he is a graduate from the Leonard N. Stern School of Business at New York University, and holds an MBA at Hobart College. Avid sports fan, like Bradley and I, we live in a time of misery. We're our sports team. For him, the Jets. For us, the Auburn Tigers. Just loses every single week, and it is hard to do. But like us, he is living proof that you can be a sports fan of a very fragile franchise.
It builds character.
Yes, it does.
He has served as president of U.S. Standard Personal Lines and Commercial at Confi, overseeing over 350 employees and managing a $400 million premium portfolio. His earlier roles also included leadership positions at major brokerage firms, including Alliant, Epic, and Marsh. He began his insurance career at Chubb Insurance, holding various underwriting roles. And today, he serves as president at Rate Insurance and leads a team of over 230 professionals focusing on organic growth, strategy, and execution to enhance the company's distribution model. Ladies and gentlemen, it is my profound honor today to introduce to you first-time guest on the IGP, Mr. Jeff Wingate. How are you, Jeff?
I am doing great. Awesome introduction. Thank you so much.
Oh, man, glad to have you, proud to have you on the show today. You know, Bradley, I think, did a really good job of introing why we wanted you on this insurance-related podcast with over 250,000 insurance agents from around the world watching and listening. And I will say this, Jeff, one of the things that Bradley mentioned in terms of your organic growth, I can remember being a young agent in my mid-30s, and an old head told me one time, he said, Scott, just grow your book organically. Don't go out and buy a bunch of damn insurance agencies, because when you do, you're taking on other people's problems. And I think while buying an agency can be a good thing, and Bradley's seen a lot of the positives behind buying some agencies, he's also seen a lot of the warts of what that guy told me that time of, my God, yes, you're going to take on a lot of damn problems. But tell us a little bit about yourself and kind of how you came to the decision to grow organically. Maybe you talked to the same guy I talked to. I don't know. But talk to us a little bit about it today.
Yeah, no, absolutely. No, thanks so much. Appreciate it, Scott and Bradley. Great to be here. Thanks for having me. And yeah, no, I've been at Rate Insurance, running Rate Insurance for the last 4 years. You know, been in the business for 35 years. And when prior to coming to Rate, I was at Confi and did about 45 acquisitions and integrations. So I can definitely relate to that, where you get some really good ones, and then also you get some ones that have those issues, and it's really hard to go forward. But really with rate is we're growing at about a 24% clip organic growth, and it's just really exciting. I'm blessed to have just an awesome team, and we're very, very fintech focused. So when I came on board about 4 years ago, we get approximately at that time about 99% of our business coming from our mortgage company. So lots of leads coming from mortgage. And then we said, we need to stand on our own. And also, we need to create a company where we can attract talent across the US. And so we then made the decision that we're going to be a virtual organization. And I've got staff, about 230 individuals across the US, residing about 40 different states, and aligned by region. And then fast forward to today is in terms of our new business, we're getting approximately 50% coming from our mortgage partners and 50%, coming from other lead aggregators, alarm companies, inspection companies, and moving companies, and things of that nature. And then also, we've been doing a much better job hiring individuals that are self-sourcing business. And so we looked at this and say, hey, wait a second, we could really grow our top line and just focusing in on our core lead generators, which is our mortgage originators, and then plus branching outside, outside of mortgage. And that's really been the secret sauce. And then basically kind of combining everything together, and we put it under a really strong tech platform that sits on top of Salesforce.
So tell us, there's a lot to unpack there.
Yeah, there is.
It seems that there's a huge advantage to having your own proprietary tech platform.
Absolutely.
You look at companies like Goosehead, like Brightway, some of the largest agencies in the country, and have built their own technology platform. So A, what led you guys to do that, and at what point did you do it? And B, what's the differentiator versus some of the off the shelf stuff that's out there? Because and also, like, it's a significant investment, because Salesforce is not the cheapest.
No, absolutely. So again, is we made the investment about a little over 4 years ago, that we wanted to create a difference in terms of having a platform where we can attract talent, in which they could then get leads, and then also close those leads, and then also renew those leads, on a perpetuity basis. And so we looked a lot of different vendors, and we landed on Salesforce, as kind of our underlying platform that we build on top of it and make it proprietary. And yes, it is expensive, and it does not come out of the box. So we have approximately 10 engineers on staff that are constantly updating it, working with our carriers for direct API connections, working with our lead sources for direct API connections, and then really connecting the system so that the agent could be much more efficient in terms of how they operate. We also made a move earlier in the year, and we were on Applied Epic, and another really good platform. But we just said, we got to move service over to Salesforce as well. So for personal lines, we both have sales and service under the same platform, which allows the service reps and the sales reps to basically work together in collaboration, versus working in two different systems going forward. So I'm a true believer that having a proprietary platform, it allows you to recruit better, and allows you to integrate with your lead sources better, and allows you to connect with your carriers, and then most importantly, just have much better conversations with your clients that you're turning into, your prospects that you're turning into clients.
Probably shortens your training time for the newbies as well, because they're all working in the same system. And I'm
Totally.
sure, knowing you, not like I do, but you seem like a guy that's very buttoned up. You've probably got the how-to videos dialed in on the Salesforce platform that you guys are using. Let me ask you a question. My experience with mortgage lenders
Hmm.
and partnering, using mortgage lenders as referral partners, I realize that you guys are utilizing technology by talking them into like an open API integration to streamline that flow of data that's coming from that mortgage originator to your platform for quoting purposes. But how do you get, and it may just be the talent that you've recruited. One thing I've noticed about mortgage people that we partner with relative to that referral partnership to bring more leads into your agency is to stay top of mind. You've got to stay in front of those guys.
Oh, yeah.
You can't go visit them once or twice and then let that relationship die on the vine. What are your people doing? Is that just those people that are working virtually, getting out, beating the streets, staying in front of these people to stay top of mind?
Yeah, it's a great question. Is that our mortgage originators don't have to work with us, so we have to constantly work with them so we can earn their business.
Correct.
So we spend a lot of times putting together our value proposition for the LO in terms of how we can help them close loans faster, how we can help them bring quality resources like insurance to the table, and then basically create revenue for the entire holding company, both for home insurance, because it's required for the mortgage, and then of course cross-selling the auto and other lines. And so what we do is that we have a team, one person from business development, and all of us working together, where we're assigning our LOs out to our agents, and then our agents are building relationships, with the LOs, so they know exactly who we are, and then also how they want us to be working with their prospects, that we're
And
going to turn into
LO
clients, and
stands for
that's the key.
lending officer. Is that what it is? What's LO?
Yeah.
Okay.
Yeah, great. Sorry about that. Yeah, lending officers. So
And
lending officers, we call them, LOs, and then working with them in terms of how they would like to work, with us and how they would like us to work with their prospects that we're turning into clients.
what's your messaging? I'm gonna assume if Scott Howell, because I look like Eddie off of Christmas Vacation and act like him and live on Meth Mountain, I'm guessing a lot of mortgage lenders, when I walk in their office to start talking API integration, are going to call security and have me handcuffed and taken out of their office and questioned by police in the parking lot. Hopefully, I will not have wrecked my car like I did in Bradley's parking lot this morning. But how in the world do you get them to open up their API? Because I could just see that's where the conversation stops. Like we're not giving you an API connection to our shit. You can forget that.
Right, right. Now, it's a great
Bradley,
question. So
do you have an
for
answer for
us,
that?
yeah. Yeah, for us, is with with Rate Mortgage is since they're our parent company, is we can
Ah,
connect directly to their system. And basically then I've got the name of the address, I've got specific aspects of the loan that I need. And then I also have third parties where I'm pulling in the property facts or the auto facts. So I have it right in front of me so I can have, much more of an educated discussion, with the customer. But for other mortgage companies, you are absolutely right. Other mortgage companies to get their API, you have to put an agreement together. You've got to making sure that you're not going to go, there's an agreement where you're not going after their loan business. And so you have to be very careful, in terms of those agreements, because no one's
sure.
just going to turn on an API just to turn it on. You've got to have an agreement. You've got to have a business relationship together. Some sort of if you're allowed to by law, a rev share, but you got to have put all of those on the table.
Right.
Yeah. Do you ever run into any RESPA issues with this?
Yeah, you've got to be careful with RESPA, but we have not because the home insurance is required for the loan. And so again, we are a wholly owned subsidiary, and so we are separate and distinct, from our parent company. And as long as you're a wholly owned subsidiary, and you're operating as an agency, you're not going to have those issues.
Gotcha.
Got you.
Yeah. So in terms of the tech too, it's a question I have. Are you with Salesforce, are you requiring that the carriers that you're working with also integrate with Salesforce? And what's that conversation like?
Yeah, great question. So we're not requiring the carriers, but we have in our roadmap for 2026 to integrate, with all of our top at least, top five carriers, from an integration standpoint, because then what we could see, instead of us having to bridge to Easy Links, which is our rater, or bridge to, let's say, PL Rater, whatever that
Right.
platform may be, is by putting in the name and address, by pulling in property facts, by pulling in auto facts, I can then see the rate right within, the system, and I don't have to make a call, in order to get it. And so it's much faster, going forward. So we already have some API connections with some of our key carriers, our flood carriers. We have API connections. We've got some of our coastal wind carriers in there as well. And then on the docket that are being worked on right now are our top five. And so, we can't get every single carrier in there because some of them will do it, some of them won't. But as much as possible is to pull in as many carriers as possible so you can see the rates right up front and they're more bindable, versus
Yeah.
having to bridge to another system.
Yeah, it's always a fun conversation getting to the right person at said carrier that
Oh, yeah.
understands what you're trying to do. It's never the
You're
marketing
talking about
rep.
the technology
Yeah, it's
side of
it's
it.
never the
Yeah.
marketing rep, right?
They're like, I don't know.
And-
I mean, just call the. I don't know.
Yeah, well,
They-
we start, our reps are awesome, but just
Yeah.
like you guys, the reps are awesome. We start with the marketing reps and then we work our way around that and
Yeah,
to have
till
those
you kill them in a
conversations.
damn car wreck in Athens, Alabama, then they're
Well, and
not
it's-
too awesome after
you,
that.
Scott, you might have lost that appointment if you'd have kept going. You know,
Jesus.
it's always interesting. When you're guys listen, when you're at Jeff's size, the tail wags the dog.
Tails wagging the dog, ladies and gentlemen.
Hey, Mr. Carey, we want you to do this. Okay, great. So Jeff doesn't know this. So I, a couple years ago at my agency, we built our own personal lines rater. So
Cool.
we're a coastal only, basically a coastal only agency. None of my carriers are on PL Rater. None of them are on Turbo Rater. None of them are on Easy Links.
Yep.
And the stories of how we got some of the APIs are hilarious. And some of the stuff we had to do. Like I had one carrier that asked me to fly out to speak to their leadership team at one of their offsites. And they wanted to pay me, I think, 10 grand to do it. And I said, how about you just give me the API and I'll do it for free? They're like, yep, done.
Nice.
There was another one. This was a funnier story. So me and Chris May, we go to this carrier did a trip for all the top agents, and part of the trip was we got to go to their home office, and we're in the home office, and they're having like a normal work day, right? And we had just started building this rater. Me and Chris built it together. They're having a normal work day, right? There's like 20 people that are with us, but then there's other employees walking around. Well, this guy walks by us, and he's got his coffee mug, and he's got his name tag on, and it said CTO on it. And he walks into the break room. And I tell Chris, I said, I'm about to follow this guy in the break room and go get APIs. And I literally just followed him in the break room and cornered him up. And it was just me and him. And he was like, I gave him my pitch. He said, we just finished integrating with insert carrier here. Not going to say the name. And I hired a bunch of temp help to do that. And I really would not like to fire those guys yet. So yeah, we'll do it. And I walked out and I'm like, it's done. He's like, you just stalked that guy in the break room. I said, yeah, man, this just how it's done.
Well, it works.
But
That's awesome.
By the way, Jeff, this was last week, not this week. It's last week. I had a technology that I needed to disconnect and reconnect on Agency Zoom. And I go down to the little wagon wheel, the settings, and then you go to the integrations and you scroll down, and I'll be damned if there's Portal Insurance's Rater on. I mean, there's all these huge technology companies on there, like huge. And then you see Portal Insurance Rater. And I'm like, son of a bitch. There's Bradley Flowers.
That's another story that I can't
That's
tell
awesome.
on the podcast how we got that done. But what are some of the issues? Here's the thing. It's like when we weigh, and I know you come from a background where you worked at some places and ran some places that did M&A,
Yep.
Everything in life is a give and a take, right? There's going to be a hard side to everything that you do. You're inheriting somebody else's problems with M&A.
Yep.
My wife is a State Farm agency owner, and she refuses to hire anybody that has insurance experience. I own an independent agency, and I will not hire you if you don't have experience. We're different in that way. And my how I reconcile that is look, when you hire somebody without experience, it's going to take you 18 months to get them up to speed.
Yep.
When I hire somebody with experience, it's not going to take me 18 months, but there may be some bad habits that you have to untrain. My take is I would rather not spend the 18 months training, and I would rather untrain some bad habits. Both are hard. It's
Right.
pick your hard, right? And when we look at
Pick
M&A,
your heart. I like that. That needs to be a T-shirt.
yeah, M&A versus I can't wear that one to church. M&A versus organic. There's going to be problems with both. It's just choose which problem you would rather deal with.
Right.
And same with niches, right? Like you have a niche in habitational. There's going to be issues with that. You're going to, a couple times every 5 years, turn the news on, and a building you insure is going to be on fire on the news, right? And my agency, we do commercial and personal, but on the personal side, it's almost exclusively mortgage lenders like you guys.
Got it.
And there are some downsides to that. There are some negatives to that. You know, you have maybe a mortgage firm with, 50 lenders, and then they have somebody that has a bad experience. And we've seen this like pack mentality where don't use that agency anymore, all because one person had a bad experience. And so it's a two-parter question. One, I want to know what some of the issues you guys run into. What are some of the problems? Because one thing that I think makes Scott and I different is we love to have super successful people on the podcast, but we want them to talk about like, hey, what are some of the issues you've had? What are some of the problems? What are some of the things you need to improve on? The other thing, and I'm going to guess one of the issues. So you guys operate in all 50 states, right?
Yep. All 50.
Okay. So where my agency's located, there's almost no insured that has the same carrier for home and auto because we're coastal. Right? Where my friend Andrew Ryan's located, which is in Ohio, where home insurance premiums are negative $20. It's unheard of for somebody not to bundle, right? And I know one problem that a lot of mortgage lender focused agencies have to reconcile is everybody's only worried about the home. How do you get the auto, right? And there's something to be said for, hey, we're not worried about the auto right now, we're worried about the transaction, but then how do you go back and get it, or do you require it on the front end? What's your process for that? And then after you answer that, go into some of the friction you guys have run into.
Yeah, no, absolutely. So, with organic growth, it takes a lot longer versus M&A. Obviously, if you do an M&A, you're going to get a shot of revenue. You've got, some issues you may have to deal with, or all of a sudden you brought in some awesome producers, and you can really grow the EBITDA and the top line as well. But, with organic growth, it definitely takes longer, in terms of growing your agency. So that's the first one. The second one is that we also hire licensed individuals, because it's really hard for us, when you're remote, to put together this training program, and that just takes a lot of time. So we hire licensed individuals. And, some of the issues there is that it takes time for them to learn the carriers. So, right now, we advertise and say, hey, we do business with 100 plus carriers. We all know every single state is different. The coastal writers, you've got, the carriers in the Northeast, California is a totally different, market for us. And it's really, really different. So really the pitfall is it, again, organic growth takes a lot longer. The individuals that we hire are licensed, but you have to train those individuals, and it takes a lot longer for that individual to start ramping and building their book of business.
Sure.
So when like right now we're in a hiring mode, and we're hiring, we just put on another 10 agents, but it's not like I'm going to get automatic revenue. Yeah, I got leads coming in, but they've got to learn it. They've got to build the relationships, the loan officers, build relationships with their other lead sources. And then it's going to take time for them to build their business. So you really, when you hire an agent today, that agent's not going to be profitable until next year. It really takes about 12 months for them to, really ramp and to build their book of business, going forward versus, M&A, you can get that revenue up front, and then you're off to the races.
You know what we've started doing with some of those people? So I got a hold of a spreadsheet. I don't remember who built it. That is a producer ROI calculator. And it factors in everything. It factors in technology costs, cost of service, payroll taxes, benefits. everything, and then you have like a projected production, right? And it takes you a good probably hour and a half to get all the data in.
Damn.
And I show that to them. I say, this is why I'm paying you what I'm paying you. This
Yep.
is why your percentage is this, because I'm looking at 18 months. If you crush it, I'm looking at 18 months before I
Totally.
see a dollar. And a lot of
Totally.
times I think one thing that a lot of employers struggle with is having the employee see their side of things, which the employee, I don't blame them. They never should inherently see our side of things, but it shows them like, okay, like this person's actually not being greedy. This is what they can do. You know what I mean?
Yeah, no, absolutely. And then your other question, Bradley, was regarding the auto cross sell. Yeah,
Yeah.
so we're an agency, and again, we're 96% personal lines, 4% small mid-sized commercial, and so we lead in just about every single sale on personal lines on the home, and then we're cross selling the auto, and we're trying to do that at point of sale. But a lot of times, the customer might have a DTI issue, I mean a debt to income issue. They can't put up the money, for all the autos. So, we have to defer that conversation, for a month after they close. But the team is doing a much better job of selling auto at point of sale. And again, this goes back to technology. And so, having a strong technology platform. So whatever agency, anyone is in, the technology platform is key. Because we just working with a vendor where we're pulling in auto facts, for their home that they currently live in. So then the information is right up front, for the agent to see it. And so the agent to ask the question. So we've got your home, let's bundle the auto, specifically with carriers that we don't have their capacity unless we bundle. And we're seeing
Right.
that more and more across the US. And the good news is that the market is opening, as you guys know.
Yeah.
About a year ago, I mean, our bundle rate was crap. It was about 30%. Now we're moving up towards the mid 40s, which is fantastic because we're seeing opening of carriers down in Florida, a little bit in California. Even in the Northeast, it's starting to open up a little bit. So we're definitely seeing our bundle rate go up and our auto cross sell rate go up. But it's not easy. You
Yeah.
definitely and you have to constantly follow up, because in the last thing on the carrier side, we're trying to feed, profitable business, to our carriers. They want bundled business,
Yep.
and they'll reduce your commission rate if it's not bundled,
Sure.
so there's an incentive for all sides to bundle this and also to sell. So we also have a couple kind of neat campaigns is that once the client becomes a customer, we put them on a journey. So we're sending them emails, we're sending them texts, and then especially if we couldn't close the auto, we're constantly trying to do a cross sell on a proactive basis versus reactive basis, but it's not easy.
Yeah. I would imagine, and especially when you're your size and you're talking about a carrier cutting 2%.
Yeah.
I mean, that's jobs.
No, definitely. And like, for instance, like in Florida, Florida is so competitive right now for, when I say competitive, meaning the premiums are still pretty high, but there's a lot of capacity now down in
Yeah.
Florida, but our commission rates are a lot lower. And so, it's a big incentive to cross sell the auto with another carrier,
Yeah.
and if we can do that, then it's a win-win both for the agent, for the carrier, and ourselves going forward.
Well, it's interesting too. Something that I've noticed in my 14 years in the business is the catastrophic prone areas, the areas where insurance is difficult. California, Florida, Gulf of Mexico, all the states that touch it,
Louisiana.
Louisiana, South
Uh-huh.
Alabama, Mississippi, Texas. When things are bad or trending bad, those areas get hit first. When things start to open up, those areas
Hmm.
get competitive first.
Oh yeah,
I
and we're seeing
always
it.
I always look to the coastal Florida, Alabama, California. Like Orion 180 announced the other day, they're going into California. Like you start to see like, okay, this is going to start here and then bleed out in the rest of the country. It's really fascinating. And I think it's that, obviously when loss ratios are going up, carriers aren't making money, like they're going to shut down the cat prone areas first. But I think when things are trending in the right direction, people see an opportunity for a money grab. because they're like, wait a minute, like the average premium in Ohio is
Right.
$800, but I can go to Alabama and it's $4,500. Let's go there first, and let's just hope we don't have a hurricane this year.
Is that your average premium?
No, it's lower than that. I was exaggerating.
I'm gonna tell you, Jeff. I'm gonna tell you, he's making a bunch of money this year. I'm gonna knock on wood because we hadn't had any big hurricanes or any
Oh, I know.
major crazy shit happen. These damn reinsurers, you know, when they do the treaties in that January to April time frame, you don't get any of that money back if nothing happens. So these reinsurers, in my opinion, have probably made out this year. Am I right about that, Jeff?
Yeah, we just like everyone else is you know, like we've got some top carriers that we did really well, you know, knock on wood, and our loss experience is down, and we're locking in, you know, some of our contingency agreements. So yes, they are making money. And you know, Florida is making money, the reinsurers are making money. So far so good. I mean, we started off the year with the California wildfires, and then we're like, oh God, where's that going to go? But it's we got lucky with all the hurricanes. We got lucky with some of the other loss trends. But I think that the industry itself is in a much better spot than it was, you know, a year and a half ago. Much better spot. And so are the reinsurers.
Sure.
We had a carrier CEO in our office, Jeff, on I think December the 20th of last year. And he was letting us know that they had increased capacity. They're about to take some rate decreases. Really excited. And he was on his way over to London the next day. While he was in London, Palisades happened. And I texted him some question about something we had talked about. And he said, I'm busy right now. We had $1 billion of exposure in Pacific Palisades.
Wow.
And I was like, I'm going to leave you alone for about 3 months.
Yeah.
Just go ahead and get your stuff worked out.
Damn.
Yeah. But it's interesting. And I know that I'm sure it's fascinating seeing it from your angle as well, the way things trend. And you know, insurance it just goes in a cycle, man. Scott said this forever. Like, we did a podcast years ago. The title was The Cycle of Insurance, right? And these folks that have been in the industry forever, you see it. But it's like when things are good, people think it's going to be like that forever. And when things are bad, people think it's going to be like that forever. And it just constantly goes on this thing. The problem we have now with social media and everything, that, you know, the way our world works is, can the consumers be patient enough? You know, and that was one thing I said when Florida passed the legislation around the litigation and everything, and eliminating the assignment of benefits and all of that in 2023, I believe, is, can consumers be patient enough, long enough for this to trickle down to insurance? Because it's not going to happen immediately, right? One of the agencies we purchased, so liquor liability is a big problem in Alabama. Alabama has the highest liquor liability rates in the country, and there's only like 2 or 3 carriers that offer it. And Alabama changed their dram shop laws 3 years ago. I won't get into the specifics. You guys that are listening can Google it, but they changed, and one of the agencies we acquired sent an email out to all of his liquor liability customers and said, good news, your rates are going down. Those people still call us today asking, when are my rates going? Like, it does not happen immediately. The carriers are not going to react. They want to see the data come in. They want to see the claims data. And then, okay, now we can. What I am surprised is there aren't more players in the market, but you can't expect an immediate change.
Hey, speaking of what Bradley's talking about, and this is a little different sidebar news story, but did I hear right that California about 3 weeks ago raised their legal auto liability limits? Have y'all heard that?
I haven't heard that.
It was 1530, and I think they raised it to like I don't remember if it's 3060 or 5100, but I believe that law was passed 2 or 3 weeks ago.
Well, and that's one of those things. We also live in a world where people just love to hate insurance.
Oh, they do.
And that's one of those things that is benefiting consumers
100%.
probably more than any other change that they could make.
Yep.
But I guarantee you, if that did happen, there's people complaining about it. Like, these greedy insurance companies, they just want more money.
Right.
You know?
Yeah, and you know, I've been saying this for 2 years now, shouting from the mountaintop that we have somehow managed to turn ourselves into the second most hated industry behind the Internal Revenue Service. Part of that is during the hard market, it seemed like a lot of carriers had really tightened up the noose on what they were going to pay on, especially property claims. And they were utilizing some technologies, and they still are, like hail damage reports to say, oh, well, this shows that the storm that caused this hail damage was 18 months ago, and it says in our contract that you got to report it within 12, so we're not paying it.
So
That's crazy.
California raised its minimum auto liability insurance limits effective January 1st, 2025. The new limits are $30,000 for bodily injury, $60,000 and $15,000 for property.
Got it.
Which is still like
way too low.
The average value of a car in the state of Alabama is $35,000.
Right.
I looked that up recently. You can
like just for us, it's like we're not
California.
even looking at lower limits. I mean, all of our clientele are all much higher limits to attach the umbrellas to and things of that nature.
Sure.
But I think that just so your comments before is that it just you want to make sure that you're constantly being an advisor to your customer, and that's the key. And that's like one of the things that, again, like we're talking about organic growth, by having a really solid tech platform. You're allowed to grab all this information up front, so then you don't have to ask silly questions. You have the information up front, and then you can have educated discussions with your customer, especially when the rates went up so much, last year. And like even our retention rate, started, our premium retention started about 100% at the beginning of the year, and it started shifting downward just because customers we couldn't get to, started shopping, with some of the captives and everybody else like that. So.
Right.
Again, by having a tech platform, being as proactive as possible, being that trusted advisor, those are all the things that help you, continue to drive to grow, organically.
Hey, Jeff, I've got one last question for you, and I think Bradley may have one for you as well.
Yeah.
I'm looking over your bio before we started, and your vast experience. I mean, your breadth of experience in the industry across carriers and platforms and positions that you've held. You have a resume of success. What's the biggest change over the past 5 to 10 years? We'll go back to, like, say, mid 2000s. Between then and now, what's the biggest change that you've had to personally kind of deal with in the industry and get right with relative to, staying relevant and growing organically like you have?
Yeah, no, it's a great question. Well, I'll start with the one area that has not changed and will not change, and that's relationships.
Hell yeah.
And relationships with so I'll start with that, because I was just at a conference last week, the ITC conference, and probably met with 25 of our partners, just, having speed dating and meeting and meet and greet, stuff like that. So I definitely think that what has not changed and that continues to be the most important thing is relationships with your carrier partners, relationships with your employees, relationships with your prospects and your referral partners. So that's one thing that, are constant, going forward. But I think that the biggest issue has been just keeping up with technology. And making sure that your mindset is constantly focusing on how you can do things better. And then also too with, we haven't talked about AI, like how can you incorporate AI within your brokerage model to be more effective? How could you use AI to cut down some of your costs? And we're looking at a bunch of different things, like we're doing account summarization using AI. We're doing call recording, using AI. We're doing carrier recommendations, based on prior data, things of that nature. So I think that when I look at my career path and where I am today, is making sure that I am up to snuff, with technology, and then, that I'm, understand the terms. And I think that's what's really going to drive, the efficiencies and then also the continued organic growth going forward. So definitely technology.
There was an article that came out 5 days ago. You just jogged my memory that Acrisure announced they're going to cut 400 accounting jobs.
Oh, because of
that's
artificial intelligence.
I don't know that the article said that, but that's AI. That's got to
Yeah.
be what
That's
that
AI.
is. Because you've got and it's nothing against those people, but they're, you know, I remember Jeff. So I worked for a company called Alpha Insurance for 6.5 years, and they implemented Guidewire, I think in 2015 or 2016, and in one of those years, it was the largest technology project of any insurance carrier in America, and the underwriters up until that point, when we wrote a homeowner's application, it was a paper application and you mailed it to the home office.
You damn right you did.
And the underwriters in the years leading up to the release of the Guidewire platform
You got a stamp.
would purposefully work slower to keep more files on their desks. And I had an underwriter tell me this so that they looked more valuable. So it's like a bass-ackwards way of thinking about it. And it's like, I always tell folks, like, AI is not going to take your job as long as you use AI as well. And you
Yep.
figure out a way, okay, if I'm an accountant at this agency and I don't want to be replaced by AI, I'm going to discover an AI platform that I think can help us, and I'm going to bring this to the higher ups.
Yeah,
You know
no,
what I mean?
definitely. Like we're looking at AI right now. So, we talked about a couple of things we're doing, but we're also looking at AI and we have a sprint going on. We get a ton of email traffic, that comes into a general, email box. And we have, a group of individuals offshore that are sorting that box, in terms of, this is
Wow.
a certificate request. This is a auto ID request. This is just a mortgagee change, things of that
Spam.
nature.
Yeah.
And then how can we use it, a learning, automated intelligence, artificial intelligence to kind of look in there and sort it automatically, and if we can do that, we can eliminate some expense, for the
Yeah.
agency and be more efficient.
Sorting is just a huge I mean,
So wait a minute, Bradley. Is there not that functionality already in like G Suites where you could use Gemini to sort?
I don't know.
Because they have the. Do
I don't
you
know.
do you guys?
I'm not a big Gemini fan.
Well, take Gemini out of it.
Whoever,
But
yeah.
is there not an artificial intelligence platform already that you could bolt on to your email that would do that for you now?
So
Yeah, you can bolt. Again, I'm not the expert in there, but yeah, I understand there is some bolt-ons, but also it has to be customized. But
Right.
you're absolutely correct, is that, and I think that we're just one of many that are looking at that, in terms
Yeah.
of improving efficiency.
Almost like our phones, like my Android phone. I probably get 7 phone calls a day, and I've gotten 2 since we've been sitting here in the past 3 or 4 hours. And it automatically pops up and says spam call.
Yeah.
Yep.
So
Mhm.
You know what I'm saying?
Well,
Like
there's
same-
a lot. There's so much noise out there right
Correct.
now. Everybody's creating an AI product, and it's really, you have to be kind of savvy to tell, okay, is this an
Right.
actual product or is this something somebody created over the weekend?
Right.
But so we're using Customer IQ. It embeds with our agency Gmail, and what it does is it uses AI to route emails. It doesn't send the email yet, but it'll put it in a folder. So we have it organized by carrier and task. And then what it'll do is emails that need a response, it'll generate the draft to the person it needs
Nice.
to go to.
Right.
And the data set that it writes the email on is that employee's email, that employee's old email. So it writes it like they write it. So it's not doing it for them, but it's sort of starting the work so that they can just go through really quick. But I'll tell you one that we did, Jeff, and this is for the listeners. We just figured this out. So we get a lot of calls, like many of you do, from mortgage companies, right? Like
Yep.
we're trying to set up the payment, whatever. And we have a team that's offshore as well that handles all of those calls. Because the person that's calling in from Wells Fargo, they're offshore as well.
Correct.
And they're, okay,
Same
here's the
here.
renewal
We do
info,
the
here's
same
the
thing.
bill.
Yeah.
And so we actually figured, and this has nothing to do with AI. So I am anti phone tree. And I know there's going to be a point where we're going to get so large, we're going to have to probably do it. But I don't like phone tree. So you call our office during business hours, somebody's going to answer. So what we did is we figured out through our phone vendor that we could route calls based on the area code.
Mm-hmm.
So we went through and pulled phone records and took all of the area codes that these banks were calling from, and most of them were 800 or 888. And if a phone call comes in and it's got an 800 area code, it's automatically routed to that team. It doesn't even ring at the office. That made an impact immediately. But that's
awesome.
where there's two areas I'm very unimpressed with a lot of the AI stuff I've seen. But there's two areas where I get excited about. One is connecting programs together without these two programs being in on it, right? Like show me how to connect using AI Salesforce to Progressive Insurance without having to get these two, right? That impresses me. And then the other thing is routing. I think a lot of people are looking at some of the more sexy AI stuff and they're overlooking how often their employees and even them are having to route stuff to the right place. And sometimes I feel like I'm a professional router in my office. And like if I died tomorrow, nobody, like, you know what I mean? Like,
yeah, like everybody just stopped.
Yeah.
Like, oh shit, what are we going to do now?
I'll tell you what Gmail should do with Gemini is they should say, hey, you've received 1,500 emails in the last 6 months regarding this topic, and you've sent all of them to this person. Want us to create a rule for you.
Right.
Rather than you having to go in there and figure it out.
Right. Yeah.
So it's been a good talk, Jeff.
Yeah, thanks for having me.
Dude, I'm so proud of you. I don't meet many agents, principals, whatever, who have grown to the size that you are organically ever. And I mean, you're obviously hundreds of millions of dollars because you're in the top 100. I mean, what you've achieved, you should go home tonight and be very proud of yourself. And I know it's not, excuse me, you should go home tonight and be very, very proud of yourself and your team and what you've accomplished.
Well said. I was just about to say the same thing. It's all about the team, and again, just very blessed to have an awesome team here. At Rate, and being able to put it all together. And when we're 230 employees, we'll be probably 250, 260 next year. And as you get larger, as you guys know, it's harder and harder to continue that growth.
Yeah.
Because you got to grow over a certain level.
Yeah.
Those are the kind of discussions that we're having. And so we are making investments now that are hitting our P&L, but it's for next year. And so we're modeling out, in terms of the investments that we make now. When I say investments, meaning new hires, because of the lead sources that are coming in, outside of mortgage and also within mortgage, is, but over 5 years, if we don't make the investment now, we're not going to grow as fast, versus doing nothing. So it's important. So, I think that, with all your listeners out there, is organic growth is awesome. We love it. It just takes more time.
Yeah.
In terms of doing it. It's not an immediate shot in the arm. But the other thing too is that you don't have the debt, that you're bringing on as well with M&A. But we are investing, with technology. So I would say that. So when you look at that, we're like, you're not investing. We are investing a lot of money, and just blessed to have a great tech team to kind of build that journey for us, going forward.
Hey, you know who he reminds me of? Who? Billy Wagner. Hey, Jeff, I know a couple of carriers right now looking for a CEO. You sure you don't want to? You sure you don't want to jump? We can get you your own airplane.
That's funny. Love it.
About $8 million a year, guaranteed over 10 years.
Love it.
I'll tell you who we need. You know where you need to be is not where you are.
Where's that?
You need to be in the front office over there for them damn New York Jets. Get that shit unscrewed over there, because obviously that place is a damn nightmare.
It's a mess, and it's a complete character builder, as Bradley mentioned at the beginning of the call. So it's just absolute mess. Very frustrating, but we'll see what happens.
Hey, Jeff, you know who I sent to Bradley 2 days ago?
Who's that?
The little brother for the quarterback for the Indianapolis Colts came over here and interviewed with Bradley the other day.
He's coming in for his final interview in a couple weeks, and if he shows up sober and clothed, he's got the internship.
Oh, he'll do that.
Yeah, it's funny. My brother-in-law's son, my nephew's 14, and he's just getting into football, and he's an Auburn fan. His dad went to Auburn.
Bless his heart.
I texted my brother-in-law the other day, and I said, man, I kind of feel bad for Whit, because when I was growing up and when he was growing up, our football teams were good. And he's having to, like, his only memory is going to be 3-9. And 3-9 and foreign whatever, and he's like, yep. And I said, but it's building his character. If he sticks through this, he's a real fan.
What's the jet?
It also teaches you. It teaches you not to. Because one of the things I really hate most in this world, Jeff, are Alabama fans. No offense, Rand.
Here we go.
Because they're trust fund fans, right? They've only known this lightning in the bottle of this. You know what I'm saying? And so
you mean 20 years of winning football
20-year
games?
Lightning in a bottle. But when you know nothing but winning, you don't know how to handle it when you lose. And so it's good when you get into something. If it starts out bad, then you really appreciate it.
You do.
It's like, I don't know if you guys watched this. Start going off the rails. We'll end it here in a second, Jeff. I don't know if you watched the Charlie Sheen documentary. Did you watch Charlie Sheen documentary?
I've seen little parts of it.
Yeah. Oh, I've seen it. Oh, it's wild.
And one of the things he said in there was, the old saying of, if you at first you don't succeed, try and try again. What if you succeed first? What happens? And it was a very 10 seconds, but I was like, that. He achieved so much success so early that it just, you don't know how to maintain it. You feel guilty that you had it. You go down, so it's like, I think it's in a lot of ways good when, you start a business and you don't have success right away, or your football team sucks, and it makes you appreciate when things are good, and I've often said with me, like, I started in this business doing life insurance, door-to-door commission only. I didn't get paid unless I sold something. And I would never go back to that. But in times where things are not great at the agency, I always look back at A, drawing on those experiences, but B, like, man, I'm glad I'm not doing that. You know what I mean?
Yeah.
It makes you appreciate it way more. So you ready to close this out?
Jeff, thank you for being here today. I'm going to shut this thing down. Guys, as I end every episode, rewards come from action, not discussion. Get your ass out from behind that desk today. Quit, shuffling paperwork on your desk or doing TPS reports. Go build relationships with people. Go build relationships with mortgage lenders, with prospects, with your own team. Go build relationships with them. Go make money for your family, for your wife, for your husband, for your kids' college fund, and for your parents and your in-laws like mine that are struggling out there. Go make money for them. Write good business for the agencies that you represent, and write good business for the carriers that you represent. Bradley Flowers, I love you.
Thanks, man. Thanks, Jeff.
Thank you, Jeff.
Thanks, guys. Appreciate it.
Yes, sir. Guys, you were listening to the Insurance Guys podcast, and we love each one of you. Thank you so much for being a part of our family, and we'll see you back here real soon. Take care.